Hello guys. Hello guys, hello guys, hello guys, hello guys. We are about to start with our hello guys. Hello guys, we are about to start with our today's session, our today's Zoom. Our today's YouTube session. So my name is Nimrod, part of Market Luminaries. I'll be trading with you today. I'll be the one guiding you through this weekly analysis. So today we are going to be focusing on three pairs. That's the gold, USDT, and NASDAQ. Those are the most traded pairs. So those are the pairs that we are going to be focusing on for today. So yeah guys, so let us begin. Let us begin. So we can see that we have USDT here. We have USDT here. And we start our analysis on an H4 time frame. You understand? We start our analysis on an H4 time frame so that we can see the market direction clear. So that's the reason why we start our analysis on an H4 time frame. That's why we call them top-down analysis. You understand? That's why we call them top-down analysis. So let us begin. So I'm just zooming in the chart. So on USDT we can see that we have a high here. We can see that we have a high here and we have a low down here. Sorry, it's not clicking. Okay, we have a low down here. So this is our overall low, and then this is our overall high, and then we can see that the market, it's on a downtrend. You understand? The market has been breaking structures to the downside, but from there, that's where the market started pushing. You understand? At some point we are expecting the market to keep pushing until it takes out all the liquidity that's being formed here, and probably it's gonna react on this low. So that's what we are expecting, guys, for this week. Understand? Because remember, the market on a daily and a weekly time frame, the market is bullish. USDT is very bullish. You understand? So at some point we are expecting buys. You understand? So we can see that the market gave us a demand zone here. That's a demand zone. So we are marking our demand zone, and you can see that our demand zone has been mitigated. You understand? So let's write demand zone. So we can see that our demand zone was mitigated. That was supposed to be our sniper entry exactly here. That's where the demand zone got mitigated. You understand? That's where the demand zone got mitigated. So after spotting our demand zone, we have to go up and look for our supply zone, where the market reacted and then it started pushing to the downside. So we have a last, exactly here, we have a last bullish candlestick before the push to the downside. So we mark that candlestick as our supply zone, and then as you can see, that candlestick has been mitigated, meaning exactly there, that's where we were supposed to take our sniper cells, you understand, exactly there, when the market gave you the demand zone and then it went up and it came back down to mitigate that demand zone, you understand, to mitigate that demand zone. So we can see that our supply zone was mitigated, right? Our supply zone and our demand zone were mitigated. So, but let's look for new and fresh supply zones and demand zones. So we can see that the market was on an uptrend, and then suddenly here it gave us a change of character, meaning the market was breaking structures to the downside, to the upside, and then exactly here, that's where the market started breaking the first low. Instead of breaking the highs, it started breaking the lows, you understand? So that's where the market gave us a change of character, you understand? So we have to mark our change of character, and then we have a break of structure here. So that's our break of structure, meaning after giving us a change of character, the market started breaking structures to the downside, you understand? Another break of structure here. You can see that the market was breaking structures to the downside, and then from there the market gave us a high here, you understand? The market gave us a high there. Instead of the market keep breaking up breaking the lows, it started pushing up and it took out that high, you understand? So that's where we had our change of character. Here we can use this area just because that's where the market started taking out the high. We can just use that area as our change of character, you understand? That's our first change of character, and then we have followed by our BOS here, a break of structure, you understand? A break of structure here. That's where the market started to break structures to the upside. So we can see that the market is giving us some sort of a pattern like this, you understand? And now we have to see, we have to search for an untested supply zone, you understand? So our untested supply zone is this last bullish candlestick before the push to the downside, you understand? Before the push to the downside. So we can see that that zone was never been tested, you understand? That zone has never been tested, meaning that supply zone is still fresh, you understand? That supply zone is still fresh for us to keep our eyes on that one, you understand? So, and then we can see that from there the market created inducement here and also here. So this is inducement, you understand? The market was trying to push to the upside to mitigate that untested supply zone, this one, and it failed, so it continued pushing to the downside. But let us see, so exactly here on this level, on this zone, it also gave us the last bullish candlestick before the push to the downside for us to use as a supply zone, you understand? As you can see, for us to use as a supply zone, for us to use as a supply zone. So we have a supply zone there, and the market did what? After giving you that supply zone, it went down, it created inducement, it failed to mitigate uh, that supply zone, and then next thing it started pushing to the upside until it mitigated the supply zone. After mitigating that supply zone, that's where the market started dropping. You understand? So at some point we are expecting the market to drop until it takes out this liquidity that's resting below here. You understand? Because we have liquidity being created there, and then our target is gonna be here. It's gonna be this demand zone there. That's gonna be our target. Why are we targeting that demand zone? Because the market created a lot of sell-side liquidity. It created a lot of sell-side liquidity. So at some point, before the market starts shooting up to that unmitigated supply zone, we are expecting the market to shoot down first, take out that liquidity that has been created there, because you can see here on this area it took out the buy side liquidity. You understand? We had buy side liquidity on these two levels, so the market took out the buy side liquidity first, and then next thing, that's where it started to push to the downside. Why is it pushing to the downside? We have sell side liquidity resting below these lows here. You understand? We have sell side liquidity resting below these lows. So we have sell side liquidity there. So since the market took out the first buy side liquidity, we are expecting the market to come and take out the sell side liquidity. But we are also witnessing a fair value gap here. You understand? Meaning at some point we don't have to just start selling the market exactly when it opens. You understand? The market has to first retest and fill up this fair value gap here. That's an FVG. It's a gap. As you can see, the market created a gap there. So we are expecting the market to give us a pullback just to take out that gap, and then from there, that's where we're gonna continue pushing to the downside, and we are targeting this liquidity. You understand? We are targeting that liquidity area. So we are going to look for our entry somewhere here, somewhere there, and then we target this demand zone. You understand? Because the market doesn't turn in the middle of nowhere. After sweeping liquidity, it needs to find a zone. You understand? It needs to find a zone. So this is what we are looking at on USDT, guys. This is what we are looking at on USDT. So just to give you time to maybe 2 minutes, and then you view the setup, and then after that we move to gold. Remember, I mentioned that today we are going to be focusing on 3 major pairs, most traded pairs. You understand? Meaning it's the USDT, the gold, and the NASDAQ. You understand? And the NASDAQ. So we are only focusing on these 3 pairs for today. So this, what you are looking at on the screen, that's USDT, and then now we are going to NASDAQ. You understand? So you can also, if you are sorted, let us move. So I'll just give you 3 minutes for you to view, and if you have questions, feel free to ask. If you have questions, you can write them there on the comment section, but I think I won't be able to see them. So I won't be able to see them because I'm using OBS to review my setups. You understand? So this is what we are looking at for this week on USDT. We are looking for the market to give us a pullback to that fair value gap, and then from that fair value gap, that's where we are expecting to sell the market, because you can see that there is a lot of selling momentum exactly there. You can see these three candlesticks, you understand, on H4 time frame. They have a lot of momentum, you understand. There's a lot of volume to the downside. So this is what we are expecting. So this is our setup for this week. This is our setup for this week. And so let us move to NASDAQ just to because of time. Because of time, let us move to NASDAQ. It's already late. So let us move to NASDAQ. Let us move to NASDAQ. Also, oh, okay, I can see comments. I can see comments. I can see comments. The camera, it's not clear now. How's it, guys? How's it, guys? How's it? How's it? How's it? So I'm just looking for a way just to take this thing only, the comment section only. Okay, I found the way. I found the way to take the comment section only, and then I can just, so that I can read your comments, guys, while we are analyzing. So sorry if any question regarding the setup, so that I can just view. We are good. Okay, Tabiso. Okay. How's it, guys? How's it? I think you are fast. Okay, I'll try to be slow on the next pair, guys. I'll try to be slow on the next pair. Because we cannot restart our analysis just to respect time and your time, you understand, because it's already late. Some of you are going to work tomorrow, so at some point you need to get some rest. Loving the way the chart is flipping. Exactly. Evening, say, how's it, guys? How's it? Greetings, fam. How are you, please? How are you? Okay, so are you all sorted with USDT before we move? Because I have to hear from you that you are sorted, you understand? Are you all sorted before we move? Are you all sorted before we move, guys? All clear? 34,000 or 34 as your TP is a TP say. So with me, that's where I think the market is gonna push to, you understand? Because once the market grabs this liquidity that is resting here, let me show you. Once the market grabs this liquidity that is resting here, you understand, below here, the sell side liquidity, the market doesn't turn in the middle of nowhere, you understand. At some point, after grabbing that liquidity, the market needs to find a zone. So we do have a zone. That's our demand zone down there, you understand. Meaning once it takes out that liquidity, it needs to go there. So, but at some point we don't control the market. The market can do whatever after sweeping the liquidity. But that's where we are expecting the market to go before we can keep pushing to the downside, because we have a lot of sell side liquidity. That's why you can see the market, it's creating long movements to the downside, you understand. While it was going up, it was creating small candlesticks. You can see this consolidation part. It was taking time to push to the upside, but after taking out that liquidity, that sell side, that buy side liquidity, that's where it started gapping to the downside. You can see, look at these three candlesticks on the H4. They are long, you understand? Meaning at some point now it's rushing for the sell side liquidity. So at some point, or once it takes out that liquidity, that sell side liquidity, it needs to react on a zone. So you can also use that area or that zone as your TP. But this is H4 time frame. So meaning at some point that TP is for people who are swing traders. You understand? If you are a swing trader, you just enter, and then when you are in profit, you lock your profit, meaning you trade your stop loss into profit, and then you continue holding. You understand? And then you continue holding until you reach your TP. So it's for swing traders. So let's go to gold. Let's go to gold. Oh, it's NASDAQ. NASDAQ. Sorry, this is NASDAQ. So this was our last week's analysis. Remember, as you can see, we are still targeting the very same area. We took buys here, and then we took profit exactly when the market hit our supply zone, and then from there we sold the market on Friday on our school. Those who were attending our school on Friday, we sold NASDAQ, and we made profits, guys. We've made profits. So since we are starting new analysis, remember these were last week's analysis. So at some point we need to do this week's analysis on NASDAQ. So we just have to remove everything on the screen. So also let me check the comment section if you are having any questions. Sorted. Okay, no problem. Everyone is sorted. So let us continue with NASDAQ. I'll just open the screen so that everyone can see NASDAQ clearly. We can see, if you can look at NASDAQ, guys, you can see that NASDAQ it's coming a long way. You understand? So we can just remove everything, and then you can see that now we have a clear chart on NASDAQ. You understand? So we are going to focus where we have our high, our overall high. Remember, now I'm trying to explain slow, you understand, so that everyone can understand. I'm explaining slow. So first thing that we need to do is to check our high and our low, our overall high and our overall low. So we have a high there. You can see that after NASDAQ gave us that high, it's been playing below that high for a very long time on H4. And we have a low here. We can also see that after NASDAQ gave us that low, it's been playing above that low for a very long time. And we can see that the market, it's on a downtrend. You understand? It was on a downtrend, and then next thing it started pushing to the upside. Remember, on NASDAQ, the overall trend, whenever you view NASDAQ on a bigger time frame like the weekly, NASDAQ is bullish, guys. So but whenever you start seeing it going bearish, it's whenever you move to a smaller time frame. You understand? On a weekly time frame, NASDAQ is very bullish, meaning at some point we're still expecting NASDAQ to buy, guys. We're still expecting NASDAQ to buy, but at some point it needs to go up, down, up, down, up, down, following a certain trend. So we can see that now NASDAQ, it gave us a buy trend. You can see our first trend was a downtrend, and then next thing NASDAQ broke structure. NASDAQ broke structure to the upside, and then it gave us a retest on that trend, and then next thing it started pushing to the upside. So this is for people who are using trend line analysis. You understand? If you are using trend line analysis, this is for you. But let's go back to our main setup. Remember, with us we are using smart money concepts. smart money concept. It's a different strategy. It's different than trend line analysis. So we can see that there we marked our high and our low. Second, we need to check for our supply zone. How do we find the supply zone? A supply zone, we go where the market gave us a high, and then we look for the last bullish candlestick before the push to the downside, and then we mark that candlestick as our supply zone. So we can see here where the market gave us a high, right? The market gave us a high there, and then we have to look for the last bullish candlestick before the push to the downside. So this is the last bullish candlestick before the push to the downside. You understand? You can see after it gave us that bullish candlestick, it started dropping from there. It gave us this bullish candlestick, and then it started dropping. So that's our supply zone. You understand? But let us see if that supply zone was mitigated or not. You understand? So we mark our supply zone, and then we drag it to the left, to the right, sorry. We drag it to the right. And then we can see that that supply zone was mitigated. So here, that's where we were supposed to catch our sniper trade on NASDAQ. Whenever you enter on a zone, you exit on a zone. If you enter a sell on a supply, you must take profit on a demand. You understand? If you enter on a demand, you must take profit on a supply. So you can see the market, after tapping into that supply, it started pushing to the downside. You understand? So let us find out more on what caused the market to move. Remember, you need to have a lot of confirmations, because before you take a trade, you need a lot of confirmations before you take a trade. So if you are having any questions, I will answer them after, when I'm done analyzing. You understand? When I'm done analyzing, that's where I can open the comment section, and then I continue. So we can see that the market gave us a supply zone there, but from there we can also we are noticing a break of structure here. Understand? The market was breaking structures to the downside. You can see BOS. That's a break of structure. It's whenever the market gives you a low, and then it comes back, and then it takes out that low. So that's a break of structure, guys. That's a break of structure. And we have another break of structure here. Another BOS there. And we also have another BOS here. This is just to indicate that before the market went on an uptrend, it was breaking structures to the downside. You understand? It was breaking structures to the downside, meaning it was on a downtrend. It was on a downtrend. So from here, that's where we started experiencing what? That's where we started seeing that the market is now taking out the highs. That's our change of character, by the way. Whenever you spot a change of character, you need to look for a demand zone. So this is our change of character. After spotting a change of character, that shows you that now the market is breaking the highs. It's about to change the trend. You understand? That's why it's called a change of character. So after we spot a change of character, we need to go down here. You understand? After we spot a change of character up there, we need to go down here, and then we look for the last bearish candlestick before the push to the upside. The last bearish candlestick before the push to the downside, to the upside, sorry. So we can see that that's our demand zone, and it was mitigated exactly here. That's where you were supposed to take your sniper buys. You understand? After spotting a change of character, the market is now telling you that I am ready to move to the opposite direction. You understand? A change of character, it's a zone that tells you that I am now ready to move to the opposite direction, because you can see that the market was on a downtrend from there, and then it went up. It gave you the change of character. The change of character, it's making you aware that from here I'm now ready to move to the opposite direction. And then once you spot a change of character, you need to go down where the market gave you a low, and then you try and find a demand zone. So this is our demand zone, and then you wait for the market to come back to that demand zone so that you can take your buys. You understand? You can take your buys. So we can see, and then from there, after it tapped, it started breaking structures to the upside now. So this is a break of structure. You understand? That's a break of structure. Now, instead of breaking structures to the downside, now it's breaking structures to the upside. You understand? So we also witnessing a fair value gap on this long candlestick, but this gap was filled. You understand? You can see that gap was filled. The market went down. After giving you that gap, it went down, it took out that entire gap, and then after taking out that entire gap, that's where it started pushing to the upside. You can see it filled out this entire fair value gap, and then from there, that's where the market started pushing to the upside in a consolidation phase. You understand? So let us see what's causing the market to push down now. You understand? We need to find reasons. Why is the market selling now? So you can see below this fair value gap, you understand, below this fair value gap, we have a demand zone, another demand zone. Remember, this one, it was tested. Now we have to look for an untested demand zone. We have a last bearish candlestick before the push to the upside here. You understand? That's the last bearish candlestick before the push to the upside. That's our untested demand zone. You can see the market tried to take out that demand zone, but it failed. That's inducement, by the way. That's inducement. Whenever the market gives you false confirmation, that's inducement. So we have a demand zone here. Let me just mark it so that no one gets confused. We have a demand zone there, an untested demand zone. We are expecting the market to test that demand zone so that if there is a push to the upside, it must first test that demand zone and then it goes up, or it breaks the demand zone. You understand? If the market has a lot of volume to the downside, it can also break this demand zone here. So now let us focus on what's happening here. So we can see that from last week, the market was breaking structures to the downside, meaning the market was on a downtrend, and then suddenly it started pushing up and it continued pushing to the downside. So we have a break of structure here. Sorry, I wrote liquidity. This is a break of structure, BOS. It's a BOS, and this one is also a BOS. That's a break of structure. Understand? That's a break of structure. That's whenever we want to see the market was breaking structures to the downside, meaning the market was bearish. And then we also have our last BOS here. Understand? And then after giving us that break of structure, the market started pushing to the upside. The market started pushing to the upside. But we can see that the market, it was going up, and the next thing, it started selling without reacting on a zone. So whenever we counter a situation like this, we need to move from this time frame to H1 so that we can find out where the market started pushing to the downside. Do you understand? We need to see where the market reversed, because it never tapped into this area. So we need to come to this area here on H1 time frame, and then we check what's happening there. You understand? Is there an untested zone? So let's go to H1. You understand? Let's go to H1, and then this is our H1 chart. So we can see on our H1 chart, guys, we have exactly there, you see, we have the last bullish candlestick before the push to the downside. Let's mark that candlestick. You understand? Let's mark that candlestick and see if the market reacted on that zone or what. So let's mark it to the right. Let me remove this. It was just for me to keep track on that high. So let us mark it and we drag it to the left. Finally, you can see the market reacted exactly on that zone. You understand? You can see now the market reacted on that zone. It never turned in the middle of nowhere. You understand? This was inducement here. Whenever the market gives you a false confirmation, we have a lot of people who sold the market from there and then they were in profit. Next thing, it went up. You understand? Because that was false confirmation. The real confirmation, we got it, we get the real confirmation whenever the market gives us a zone and then it goes down and then it comes back to that zone to mitigate that zone. That's how, whenever it mitigates the zone, it gives you a long movement. Look at this movement from here to here, and then you can see from there it started pushing to the upside. But look at the movement after tapping into that zone. It gave you a long movement to the downside on Friday. You understand? Because it was done mitigating the zone. So from there we can see that at some point we also have a break of structure here. This is a break of structure, and then also this one, it was inducement, but we can also regard it as a break of structure. You understand? That's our BOS. That's our BOS. And then now we need to find out where the market is going. You understand? We need to find out where the market is going. A BOS. So the market, most of the time, when the market gives you a break of structure, it goes the opposite direction. You understand? Whenever the market gives you a break of structure, it needs to go the opposite direction. So we can see here on the actual market, it gave us a BOS. It's like here, you can see here, it gave you a high, it went down, it came back, it broke that high. That's a break of structure. And then next thing, it sold. You understand? And then while it was selling, it also gave us a break of structure here. We are expecting the market to push to the upside. So we have a fair value gap here just for extra confirmation that the market is gonna push to the upside. You understand? We have a fair value gap there just for extra confirmation. It's whenever the market gives you a long candlestick that's not filled, that's a fair value gap. You understand? So we have a fair value gap there. And then what we are expecting now, it's for the market to give us a pullback to that fair value gap, and then after filling that gap, we start pushing to the downside to take out this area here. You understand? To take out this demand zone. You understand? This is our first setup. Remember, we can have two setups. So let us see if the market is gonna first take out the fair value gap first and then it goes down, or number two, please pay attention. Number two, the market opens and then continues pushing to the downside to mitigate this demand zone, and then it goes up to take out this fair value gap. You understand? And then probably we react on that zone. So we have two setups here. We need to monitor the market on Monday. On Monday, we need to see during London session, you understand, where is the market going to go on Monday, tomorrow, during London session? Is it gonna break, push down, or it goes up for that fair value gap and then we know that if it taps on that fair value gap, so but with me, this is what I'm looking at, guys. This is what I'm looking at. The market to go to that fair value gap, and then we push to the downside. So I stick with this setup. This is what I would love to see this week. You understand? This is what I would love to see on the market this week. You understand? So we are done with our NASDAQ setup. So if there is questions, please type them on the comment section. I'll go to them right now. You understand? If there are questions, so let me go to the comment section and then check your comments. Okay, there is questions, so let me go through your questions, guys. Let me go through your questions. All good, thanks. Hope you are good. I'm also good, peace. I'm also good. Clear, sorted. Sir, is there a way that I can maybe get in contact with you on WhatsApp? I really need your help. So with us, you can text us on our business number. You can definitely get us on our business number. On our business number. I say, how does one get added into the new free trading signals group? With that one, I haven't checked, because it's only Mr. Mike who is able to add people on groups. You understand? Only Mr. Mike can get access to adding people on groups. So with that one, I have to first maybe confirm with him on how to get it. But you can send a text to the business number, to the WhatsApp business number, the one that has a lot of sevens at the end for now, or you send a message to Telegram. Text the owner of the group that you are in on Telegram. Text the admin, you understand, on Telegram. Text the admin. You will definitely get help. So thank you. You explained very well. Thanks, guys. Thanks. Any other question before we move to gold? And then we can also add Gementati, and then we call it a day. We can also add Gementati, and then we call it a day. We can also add Gementati, and then we call it a day. So the light just switched off here, but do you still see me there? Okay, yeah, I think you can still see me. So yeah, guys, any other question before we go to gold? Any other question before we can go back to gold? Any other question? If you are having a question, you can ask. We see you. Okay, no problem. Any other question before we go to gold? Okay, the lights are back on now. So we're still at the office, guys. We are at the office, as you can see. It's not like we are trading home. We are at the office. So yeah, at some point, the reason why we are still at the office even now is just to show you guys. It's just to give you value on these things. You understand? Just to show you how much work we put in, just to help you guys understand forex. You understand? I'm still at the office now, as you can see, analyzing with you. So that's how we show you that we mean business. You understand? We mean business. It's already 10 o'clock now. We're still at the office, and it's Sunday. So at some point, yeah, even tomorrow there is a school. So yeah, guys, appreciate what we are doing for you. You understand? Appreciate what we are doing for you. How do you identify an entry point on the setup? You wait, like you wait. With me, remember, you plan your trade and then you trade your plan. Because at some point, if the market opens and then it goes to my fair value gap, you understand, this fair value gap, from there, I would have to see when the market starts giving me small candlesticks, that shows me that the market is now exhausted, you understand? It shows me that the market is now exhausted, meaning at some point there is no volume. You understand? There is no volume, so at some point it needs to push to the downside. So you just have to monitor the market whenever it gets to your zones. You just have to monitor the market. So remember, there is a point of interest in the market. So my point of interest, where I'm looking to sell the market, it's the fair value gap that I marked there. You understand? That's a fair value gap. That's my point of interest. Whenever it gets there, that's where I'll start monitoring, like sitting down and wait for maybe confirmations, patterns. It can give you a double top there. You understand? It can give you a doji candlestick or something for you to use. You understand? So let us go to gold, and then we go to German deity, and then we call it a day. It's already late. So yeah. Does this setup suitable for small accounts? Yes, once you can get a proper entry, if you can get a proper entry, it's suitable because you are going to catch it. You are going to catch a sniper trade. You understand? You are going to catch a sniper trade. And don't forget, the market is still bullish. Even if we are looking for the market to go up and then go down. The reason why we are looking for the market to go down a little bit, it's because of that untested demand zone there. But the overall movement, it's buys. You understand? Because whenever you check your weekly time frame, NASDAQ, it's very bullish. NASDAQ is very bullish, guys. So at some point, we need to follow the trend. We need to follow the trend. So let us go to gold. Let us go to gold, and then, yeah, from there, we call it a day. So this was last week's analysis on gold. You can see, look at this setup. Look at this setup. You understand? Look at this setup. This was last week's analysis. We were targeting this liquidity that was created below here. You understand? The market created liquidity. It went up to test the supply zone. After testing the supply zone, it went down. We took profit here, you understand? At some point, it didn't hit take profit exactly, but we made a lot of, we caught a lot of pips. We caught a lot of pips, but we can also see that gold, it's also reacting to the very same level. For gold, I don't think we can start afresh. We can just monitor. You understand? Because at some point we need to also respect time. By 10:30, I need to be done and going home. You understand? By 10:30, I need to be done and going home. It's already late. So we can see that gold, it took liquidity. You understand? And then it went up. It went up. And then now it's coming back down. The only zone that we need to monitor from now, it's this candlestick here. This one, we are monitoring it. You understand? You monitor. You keep your eyes on it. So we have a zone there, and we have a lot of buy side liquidity. First, remember, we took out the sell side liquidity first, and then now we are having a lot of buy side liquidity being created here. You see, we have a lot of people who sold gold on these zones. So at some point, I'm still expecting gold to push to the upside. You understand? So, but before we can push to the upside, I will look for a retest. to here, and then if this zone is strong, if this demand zone is strong, that's where you're going to start seeing gold pushing to the upside. You understand? Pushing to the upside. So this is our first setup. On gold we have two setups, so we need to monitor this setup first. We need to monitor this setup first, and then let me show you another setup. You understand? Or the second setup, gold can push to the upside, can break, and then when it opens it can push to the upside, just a retest, and then it pushes to the downside. You understand? And it takes out this demand zone. Why? Because already it's respecting, it's showing you that it's respecting this demand zone here. You see how many touches it didn't break above. It mitigates and then it breaks down. Even here it mitigated the supply zone, it broke down. Even here it came back again, it mitigated the supply zone, it broke down. It went up, it mitigated the supply zone, it broke down heavy, and then it went up again, and then after mitigating the supply zone, we saw it rejecting that zone. You understand? So at some point the market can just open, pull back, and then it drops just like that, because it never mitigated the demand zone. You see this demand zone, it was never mitigated. You can see it was never mitigated. It can also shoot down to mitigate that demand zone. So are you sorted with gold also? Okay, I understand. Okay, no problem. Are you sorted with gold? Before we check USDT, and then we call it a day. We call it a day. Are you sorted with USDT and then on gold? Yes. Okay. Okay, no problem. Are you all sorted, guys? Are you all sorted with gold? So that we can check German data and then we call it a night. We call it a night. Okay, silent means yes. You understand? Silence means yes. So meaning at some point, let's go to German date, and then after German date, we are done. We will see each other tomorrow on the school for those who are attending the school, and then the other ones probably we might see you on the Zoom session. So on USD on German data, guys, there is nothing much to explain. Look at the analysis. They are speaking to you. You understand? These were last week's analysis, by the way. Last week's analysis. We only analyze once. You understand? We analyze once a week. So look at German data. I just opened German data, and then you can see already we are moving in profit. You understand? Already we are moving in profit. So with German data, we still have a long way to go, guys. We still need to mitigate. So that's why with German data, because we haven't hit TP. So at some point I cannot also restart or erase the analysis, because TP was never hit, and we still have a lot of chances to hit our TP. So you can see our TP is that untested supply zone there as our TP. You understand? This untested supply zone, because we still have a lot of liquidity. You see this area, we have liquidity here. The market needs to take out this liquidity that's being created here. After sweeping this liquidity, that's where we can now start pushing to the downside. So whenever the market is done sweeping that liquidity, that's where we can start monitoring sells from here. You understand? From there, that's where we're going to start monitoring sells pushing to the downside. Because remember, you must know what drives the market. What drives the market most of the time is liquidity. Liquidity is the magnet. You can refer liquidity as a magnet. You understand? meaning at some point it's the one that's pulling the market. You understand? It's pulling the market to come to that area. You understand? That's why you can see German data was creating big moves to the upside. You understand? Because it's rushing the liquidity that it's resting above there. You understand? And then once we take out that liquidity, this one here, and then from here, that's where you can start monitoring sells. You understand? So yeah, guys, you can just monitor it, and then I look at the comment section, and then we call it a night. Can you move? We can move. Okay. Yeah, so this was German data, guys. I've explained German data. On German data, we still have a long way to go. You understand? For you can see our overall take profit there. You can see already it's on a pullback. Remember, the market moves on an impulse, correction, impulse. So we got an impulse, and then now it's on a correction phase. We are also expecting an impulse to the upside to take out the liquidity, and we mitigate the untested supply zone, and then from there, that's where we can start monitoring sales. You understand? So I think we are done for today. So any other question? Any other question before we end the session? And thank you for participating, guys. Remember, most of the time we are going to be doing this every Sunday on YouTube. So for you to get notified whenever we go live on YouTube, please subscribe. Click the subscribe button. You understand? So that whenever we go live on TikTok, on Zoom, you will get notified. You understand? You will get a notification stating that we are live, so that you don't miss these things. It's for free. It's for you guys. You understand? The setups, it's for you guys. We are doing this for you. So please click the subscribe button, and then so that you will get notified whenever we go live. Thanks a lot, ML traders. You're welcome. Khutazo. You're welcome. You're welcome. Any other question? Thank you, sir. We appreciate your effort. Thanks. It's Charles. Thanks, Charles. I really appreciate it, bro. So, any other question before we call it a night? I also need to go get some rest, because tomorrow it's Monday. Also, we need to be here, understand? So yeah, I learned a lot today. Wow. You are welcome. At least we were here to help. Is trading lot size 0.01 safe? Yes. Falco. Yes, it's safe. More safe than any other lot size. It's more safer than any other lot size out there. So for you to get notified, guys, I repeat, for you to get notified whenever we go live on YouTube, please click the subscribe button on your screen. You understand? So that every time whenever we go live, you'll get notified. You understand? So yeah. Thanks a lot, Owen. Thanks a lot. So guys, let me love and leave you, and yeah, let's meet. For those who are coming at the school, let's meet each other tomorrow. Those who are coming at the office for the school, so let's meet each other tomorrow. So for me, I'm out. You understand? I'm out.